Ladies and gentlemen, the November 15th, 2011 meeting of the City of Santa Barbara Finance Committee will now come to order. Doesn't look like there's any members of the public out there, so I'm not going to ask for public comment. We'll get right down to business. Mr. Samario.
Thank you, Mr. Chair, members of the committee. Bob Samario, Finance Director. And I'm actually pinch hitting for Jill Tara, who normally would make this report, but she's not feeling well, so she went home. So I'm sitting in for her. I probably won't do as good of a job as she, but we'll give it a shot. As normal, what we're going to do is, this is for the first quarter ended September 30, 2011. We just wanted to say at the outset that after one quarter, it's hard to make any meaningful projections for the year, but we look for still any unusual trends or variances, and we're going to want to comment on those, but at least give you where we're at year to date. So as usual, we'll start with the general fund revenues, and then we'll go into general fund expenditures, and then after that, we'll cover enterprise funds. And the portion for expenditures and enterprise funds will be covered by our newly appointed accounting manager, Ruby Carrillo, and so we turn it over to her just in a moment. So here on the screen are the revenues kind of in totality, and we'll get into a little more detail, but just wanted to show you how we kind of evaluate them at each quarter. This is a schedule that's in the report, in the council agenda report. And what you'll see is that we have organized this into sections. The first section of revenues are those, the tax revenues and everything else below by major category. You can see that it displays for each of those the annual budget, so that's the adopted budget. We have not amended that budget thus far this year. And then the year-to-date budget column is a number that we arrive at differently for whether it's taxes versus everything else. What we do is we take that annual budget, but we do for the taxes, we look at the previous 3 years' actual results through September in this case, and we come up with a benchmark, which is all the way to the far right. So, for example, sales taxes, a 3-year average, amounts collected through September is 19% of the budget. So what we do is we take that 19%, in that example, we apply it to the annual budget, and that gives us the year-to-date budget, which allows us to compare that number, a seasonally adjusted budget number, to the actual results. So it's kind of a benchmarking we do. 3-year average applied to the annual budget, and then we can have a meaningful comparison to the year-to-date results. So for sales taxes, for example, we've averaged in the last 3 years 19% of the total budget after three months. This year we are slightly ahead of that, 19.92%, which translates into a variance of about $157,000. And that's kind of the case, as you can see down the line, the variances we've calculated based on that seasonally adjusted budgeted number. The rest of the revenues below, we don't make those kinds of don't do that kind of analysis. We just assume that they kind of come in on a straight line basis. So we just say, with the 3-year average really is 25%, then we calculate 25% of the annual budget and then compare that to the year-to-date actual. There's one exception in there. You'll see franchise fees. We do a seasonally adjusted calculation there, so it's 23.85% is the benchmark. But in total, you can see that we're ahead of the game on taxes. The year-to-date variance is about $282,000, and then with other revenues, $355,000. And on the taxes side, this should be intuitive, given that we did pretty well in the first 3 quarters, particularly with bed tax and sales tax. But in total, we're ahead of the game. But again, we're just 3 months into it. What's going to happen the rest of the year is still kind of uncertain. But I did want to spend a little time talking about the 3 key revenues: sales tax, property tax, and bed tax, if you don't mind. So you want to go tighter on that. Tight. Yeah. I'm sorry, White. Yeah. A little more. Okay, that should be good. So, and I'll even go into more detail in a moment, but just kind of in a broad sense, you'll see the top 3, as I mentioned. You can see last year's numbers on the left, the year-end actual, what the actual growth was in that year for that revenue in relation to the prior year, and what the dollars represent in terms of how we grew that year in relation to the prior year. So sales taxes, we grew 5.2% last year, so a pretty strong year. In large measure, that's because we had, and you'll see this, but we had a really good fourth quarter. You remember the 11.1% growth that we had in the last quarter. That was for the quarter ended June 30, 2011, so it all actually accrued back to the prior year, so a very strong year. Property taxes actually came in under what we had anticipated. They actually went down 1.1%, primarily because our supplemental taxes and other revenues that are not part of the secured portion went down a little bit, and we'll see that in a moment. But the bed tax, very strong last year. So, when we're developing our budget, we really base it on, what data we have through February or March, really at the latest. We budgeted a growth. You can see, for example, sales taxes of 3%. But because of the good results we had in the year, we only need 0.4% to really meet budget. And with property taxes, because they didn't perform as well as we thought or projected, we budgeted 1%, but really need 1.2% in order to meet budget. And then finally, with bed tax, again, because of the strong results, we only need 3.3% in order to meet budget. So far, year to date, you can see no sales taxes have been received. The one we received in all the payments we received so far through September all relate to the prior year. We just accrue them back. So really for this year, we have no actual revenues recorded. Same with property taxes, because we don't start getting that until November. None have been received so far. For bed tax, we have received $4.7 million. And so that so far, year to date, we're at 9.2% for that quarter. And that's really good, because those are the three big months, the summer months where we have big dollars there. So at least it bodes well for the rest of the year. Even if we just perform moderately the rest of the year, we're likely going to do, exceed budget just because of those big months. So again, 9.2% in relation to what we needed just to meet budget of 3.3. So far doing pretty well. For sales tax, I just wanted to show you kind of the details of how we've done over the last couple of years. In 2010, we were down almost 5%, and then we really bounced back in last year, 2011. You could see on the last quarter, the 11.1% growth that I mentioned, it relates to the prior year, so that's what bumped it up to 5.2. Otherwise, it would have been more in the 3 to 3.5% range, so really a strong quarter. For this current year, again, we have not received anything, but if we just apply what we've budgeted to grow, or of 3%, you could see what that means just because of what happened last year, because we're building upon a higher base. If we just assume that grow 3%, and it could be better, we don't know, we will exceed budget by $456,000. What it really means is that last year we exceeded our expectations by about $450,000. And if you apply a 3% growth to the 450, we get to 456. Certainly, to the extent we do better than 3% in any of those quarters, it'll just help that. And I'm not going to make any prognostications, but I suspect that for the next quarter, it'll probably be fairly strong. I guess it'll exceed 3%. For the remaining quarters, I don't know. I just don't know.
Bob, you might mention the advance payments, because a couple times you said we haven't gotten any sales tax money, and then on the first schedule, we had received it. So explain how that works.
Sure. So our sales tax payments, we get them in advance. So we get 3 advances and then a final cleanup. For example, we'll get an advance June, July, August, and then we'll get a cleanup in September. But all of those revenues relate to the prior year. They relate to the quarter ended June 30. So even though we get them in the current fiscal year, we accrue them back or recognize them as revenues in the prior year. So for the current year, again, we have not recognized any revenues, even though we received cash payments. We just accrue them back to the prior quarter. So again, this revised 2012 is based strictly on what we've received and recognized in the prior year, and if we assume that 3% growth, what we expect to achieve this year. With property taxes, kind of a good news, bad news thing. The number you see revised for fiscal year 2012, $22.7 million. That's based on data that we've gotten from the county in October, and that's a certain number. We're going to get that. That's based on secured and unsecured property taxes. It's going to represent about a 0.6% growth. The other amounts in yellow are amounts that we don't get from the county information on. It's just based on what actually transpires during the year. The taxes on private aircraft, airplane, we just made an estimate of $515 based on the last couple of years' results. Same with interest. And the supplemental is the revenue we get that based on either improvements to people's property or when the property changes hands, there's a supplemental tax assessed. That's anybody's guess. We're assuming $300,000. And then another factor in the calculation is what the county charges us to administer property taxes, collect them and process them for us. And that's a big number, and it's gone up a lot in the last several years. And there's there's a legal battle going on right now in terms of how counties are assessing the county administrative fees, because a number of years ago, or several years ago, when the triple flip occurred, where we started getting property taxes in lieu of sales taxes over a 10-year period, that obviously causes, and that money flowed through the county. They started using that and counting that as a basis for charging us administrative fee, even though their real cost didn't go up. So that's being contested right now, but it's probably doubled in the last 5 years, and we've just assumed it's going to go up by 3% or so next year, or this current fiscal year. Yes.
Mr. White.
Thank you. Who is contesting that?
Municipalities, cities, across the state.
League of Cities or that kind of thing? Or?
I'm not sure it's the League of Cities. Individual cities are kind of banding together and challenging their respective county
So
organizations.
is the city of Santa Barbara one of those?
We are going to be part of that, yes.
And with like cities
Like Goleta-
statewide or?
Well, for us, it's just the cities that are part of the county. So the city of
Okay,
Goleta,
so
Santa Barbara.
Santa Barbara County
Right.
cities.
Right.
Are all Santa Barbara County cities joined, have they all joined together to do
Most
that?
of them have. Most of them have. Other counties may not have applied this approach. It just depends on each county how they've handled it. But it is fairly common across the state where counties have started counting those additional revenues as a basis, because it's just a formula, that they use. And so all of a sudden, administrative fees have gone up, in our opinion, unnecessarily, because they have not incurred incremental costs for that. But it's a big number. So anyway, those four numbers are amounts that are unknown and could have a significant impact on how we end the year. That's an uncertainty. The only part we do know is a secured and unsecured portion of $22.7 million. And then lastly, this is the bed tax, where we've had some really good results. You can see in 2011, for the year, we were at 8.7%, which shown at the bottom, $12.46 million. Compare that to last year of a decline of 4.8%. So a really strong year in 2011. If you think about where we were, what data we had when we started developing the 2012 budget, we really were using data probably through February, and we didn't know what was going to happen in the last 3 or 4 months. And those are big numbers, so we were fairly conservative, I think, or reasonably conservative. So we assumed that for 2012, based on just that data, that we were going to grow 4.5%, which I think is a reasonable number based on just current economic environment. The first 3 months have come in very strong, 12.2% in July, and then 6.7% and 8.7%. So through September, we're about 9.2% growth year to date, as I mentioned earlier. If we assume that we're going to grow 4.5% as we budgeted for the remainder of those months, the remainder of the year, we will generate about a 6.1% overall growth in relation to prior year, obviously very strong still, which will generate about $360,000 in revenues above budget. Again, as with sales taxes, I'm expecting that potentially October or November it will be stronger than 4.5%. The trends right now we're hearing from the industry, local industry, about hotels and room rates and occupancy rates. It's looking pretty good. In fact, they're pretty bullish when it comes to this whole year and even next year. So hopefully we'll get better than 4.5%. But for now, that's where we budgeted, and this just gives you a sense of what that means. Any questions on any of the revenues that we presented before I turn it over to Ruby for a discussion of expenditures?
Doesn't appear to be.
Okay, thank you.
Good afternoon. I will begin by covering general fund expenditures by department. And the first column you see there is our annual approved budget. The year-to-date budget column has taken 25% of our annual budget to represent the first 3 months of the fiscal year. The third column is year-to-date actual, which is our actual expenditures paid through the end of September. And then that fourth column is the variance, which represents any under or over our year-to-date actual versus our year-to-date budget. And I'll begin by pointing out that in total we're $1.6 million over the budget. However, most of these changes or variances have to do with timing. The fact that we incur a lot of our costs early on in the first quarter. So I'll begin by going over the police department, which is our first big department, $679,000 over budget. And there are two reasons for that. One of them being that we incurred overtime costs by sworn personnel to provide public safety during some of our community events such as 4th of July and Fiesta celebrations. The second reason is for annual support costs that we pay in July for records management system support to our software provider. And we pay them in July, but they cover 12 months for the entire fiscal year. The fire department shows a variance, a negative variance of $206,000, and some of that has to do with providing mutual aid assistance to other jurisdictions. Most of those expenses are recoverable. They're reimbursed to the city at direct cost plus an overhead rate. And the second reason is that we do have 4 fire sworn personnel out on long-term disability. So to cover their shifts, we are incurring overtime costs by other existing staff, while those 4 employees also still remain on the payroll. Parks and Recreation is our next department, $455,000, and a lot of their summer camp programs or summer youth activities occur during the summer months, which are the first quarter. So their expenditures tend to front load the budget early on in the fiscal year. Community development, we have Santa Barbara County Arts Commission that we pay up front for some of the programs that they monitor throughout the fiscal year, and those payments are made in August, September period. And last, community promotion and general government. Again, we fund some of our special events, film festival and such, Old Spanish Days, during the first quarter of the fiscal year, and so we tend to front load the budget for these activities. We also pay our debt service payments in the month of September. That covers a general fund. Then I'll move on to enterprise funds. For the most part, we do take, on the revenue side, we take a 3-year average benchmark like we do for our revenues for the general fund. On the expense side, we take a 25% assumption of budget. And so if we look at our very first enterprise fund, the water fund, that year-to-date variance appears like we are under our revenue estimates by $174,000. Percentage-wise, it's fairly close. It's 28.8%. It's a huge revenue projection of $35 million. So really it's not material, and most likely those revenues will normalize as we get through the fiscal year. The next large variance is in the airport fund in the revenue section. We see that $188,000 under budget. And most of that has to do with parking revenue. We are finding that passengers are getting dropped off versus using the parking lots just to avoid construction. We do have a tentative rate increase coming in January 2012 that was also budgeted in this line item. So once that kicks in, we expect to see that budget gap disappear. Last is the waterfront fund. That shows a positive variance of $40,000, but we thought we would discuss that a little bit and let you know that our revenues did increase significantly, just over 8% from the prior year, the same quarter. Just much more activity over at the harbor, better weather, bringing people out to the area. And the last item is the golf fund, which Bob is going to talk about in more detail.
So when you look at the schedule that Ruby was just kind of going over, it looks like the golf fund is pretty well on track on budget, but I think, it's important to look at more of the details because I think they are still trending in a negative way. This is a chart that was put together by golf staff showing the rounds and their greens revenues and then total revenues, which would include, of course, concession revenues. But the rounds, you can see, are still on the decline. In 2011, they had 19,349. They budgeted 19,400 this year, and so far, year to date, they're at 18. And this is based on the first quarters. These are first quarter numbers. So they are definitely, still down. Greens revenues, correspondingly, same thing. They're still even below 2011 actual and below budget for the current year for the quarter. And it's just a trend that's been going on in the industry. It's not something that's unique to the city's golf course. A lot of administrators or managers of municipal golf courses have been trying to figure this out, solve the problem. I know that Ms. Frapp is down in Pasadena right now meeting with a number of golf managers to kind of discuss the industry trends and how do we get to a point where we can be sustainable and not have to rely on subsidies from the general fund or other sources. So they are going to be looking at, a more comprehensive analysis, even considering hiring a consultant to help, and just look at what are strategies that we can consider in addressing this trend, if you will. And it's looking at all options, and it's not just not just more marketing or reducing costs here and there. It's really looking at comprehensively how do we solve this long-term problem, because it's structural and it doesn't seem to be going away unless we take some stronger action. They're still doing all the marketing and all that, but it's just not really making enough of an impact. They're going to be able to address whatever shortfall they're projecting this year through some one-time measures, but they're really going to have to solve it for next year, and that's what they're going to be working on. Sure.
I was at a function recently with he's a well-known golfer who now manages the Twin Lakes golf course. And he has seen that there's more of a market for classes. And so they've actually seen revenues increase by doing classes for children, classes for adults, workshops. And I make the analogy like car agencies at one time felt we sell the car, forget the service department. But they now recognize that service is where the money is for car dealers. And so they've shifted what they're focusing on and have seen an increase. So hopefully she'll get out there and chat with them.
All those things will be, I'm sure, looked at. The thing about with, classes that are provided by the Golf Pro, those are revenues related to the Golf Pro that we may not necessarily, get direct benefit from. But again, they'll be looking at all sort of aspects of this and coming back, I'm sure, as part of the development or development and recommended budget for next year, some strategies for council to consider.
Yeah, I don't think it's necessarily from the pros, but just classes that even the city could operate.
Sure.
Thank you.
Mr. White, did you have a question?
Thank you. Yes, something for the future. I would appreciate hearing how other courses are doing. If there's any information that's available regionally, that would be
That'll
interesting.
definitely be part of the discussion and analysis, for sure. So I think that concludes our presentation, unless there are other questions.
No more questions on that topic.
All right. Well, thank you very much.
We don't have any other items? What about the airport? Is that
There is one item, and that we'll be, of course, bringing it to council as well. There's a recommendation for one adjustment, and it's really a minor issue, but the airport, as you know, gets funding from the FAA for different construction projects. And in one of these projects, they came in under budget. The project, what they were awarded in a contract or grant and what they expected to pay from their own resources, because there's always a match portion. So the project came under budget. They received less federal grant, but they also needed less in matching amount. So they're just bringing that residual amount from their grant fund back to their operating fund.
I see. Okay.
So,
All right. Thank you very much.
Thank you very much.
Meeting adjourned.